Hi everyone, welcome to Digital Expert. In this video, we'll be discussing 8 fundamentally strong stocks with market cap less than 25,000. So these stocks are from 8 different sectors and has the potential to transform your portfolio. I've also included the reasons on why these stocks would perform well in the future. Watch till the end to find out why you need to get invested in these stocks. Don't forget to subscribe to this channel and share my videos with your friends and family or anyone who might be interested. So let's get started. Also check out this playlist sector-wise stocks. The first stock is a leading manufacturer of air conditioning components and systems in India. This company primarily focuses on providing end-to-end solutions for the room air conditioner industry. The market cap of the stock is 20,618 crores. The stock I am talking about is Amber Enterprises India Limited. The current price of the stock is 6,110 rupees. So Amber is a one-stop solutions provider for major room conditioner brands in India. It offers original equipment manufacture and original design manufacture services. Amber manufactures critical components for air conditioners such as heat exchangers, motors, and multi-flow condensers. It also produces non-critical components like plastic parts and sheet metal components. Amber serves some of the largest air conditioning and consumer application brands in India, including Voltas, LG, Panasonic, Hitachi, and Daikin. Amber holds a dominant position in the Indian AC market, benefiting from its partnership with top consumer electronic brands. The increasing demand for the energy efficient and technologically advanced ACs gives it a solid growth trajectory. The Indian government's PLI scheme for white goods supports companies like Amber in scaling up their domestic manufacturing capabilities. So this initiative reduces the dependency on imports and boosts local production. Amber has shown consistent revenue growth with a focus on operational efficiency. The company's ability to scale up while maintaining margins is a strong indicator of its robust business model. Many global companies are diversifying their supply chains away from China, so Amber's capabilities make it a preferred partner for international brands looking to establish or expand operations in India. The fundamentals look good for the stock and a good stock to keep in your watch list. Analyst has given a 61% buy rating for the stock. Price to earnings ratio is 110.97, higher than sector P ratio of 96.09. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 8.81%. The second stock is an Indian company primarily engaged in the manufacturing of forged and machine components. They specialize in open die and closed die forgings across industries. So this stock's products include crankshafts, connecting rods, camshafts, and other critical components. The market cap of the stock is 8,805 crores. The stock I am talking about is Balu Forge Industries. The current price of the stock is 771 rupees. So Balu Forge serves sectors like automotive, agriculture, marine, industrial equipment, power generation, and defense. A significant portion of its revenue comes from exports to global markets. The company emphasizes sustainability by adopting environmental friendly manufacturing practices. So Balu Forge has proposed capacity expansion plans, including the acquisition of Mercedes-Benz machining unit, increasing its output from 18,000 TPA to 32,000 TPA. The company is expanding into the defense and aerospace sectors, aligning with global trends and India's self-reliance initiatives under the Make in India program. Management has projected a 40 to 45% revenue growth for FY25, driven by new contracts in defense and railway sectors and increased capacity from its recent acquisition. The fundamentals look good for the stock and a good stock to keep in your watch list. Price to earnings ratio 64.73, higher than sector P ratio of 37.7. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 14.9%. The third stock is an Indian company that designs, develops, and manufactures telecommunications and networking products. It specializes in providing solutions for high-performance optical, broadband, and data networking needs. The company offers fiber optic transmission equipment for high-speed broadband networks, including long-distance data transmission, metro networks, and enterprise connectivity. The market cap of the stock is 21,481 crores. The stock I am talking about is Tejas Networks. The current price of the stock is 1,217 rupees. Tejas Networks is a part of the Tata Group. Tejas Networks also provides broadband access products such as 4G and 5G equipment to enable internet connectivity for homes, businesses, and remote areas. They also develop carrier Ethernet and IP products like routers, switches to help telecom operators deliver data, voice, and video services. It is investing in 5G technology to support the next generation telecom networks and offer equipments for high speed wireless communication. The Indian government's focus on digital transformation, the Digital India Initiative, and 5G rollout will significantly boost demand for the telecom equipment. Tejas Network is well positioned to cater to this demand with its indigenous products and solutions. The production linked incentive scheme for telecom and networking products encourages domestic manufacturing, benefiting companies like Tejas. The increasing global demand for cost effective and reliable telecom solutions provide growth opportunities for Tejas Network. The growing need for high speed internet and data connectivity drives the demand for optical fiber and broadband infrastructure that is also benefiting Tejas Network. The fundamentals look good for the stock and a good stock to keep in the watch list. Price to earnings ratio is 47.26, higher than sector P ratio 15.98. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 12.2%. The fourth stock is a prominent manufacturer of precision engineered components for sectors such as aerospace, defense, and oil and gas. They produce high precision components for aircraft engines, defense systems, and other aerospace applications. The company manufactures components for gas turbines, steam turbines, and other power generation equipment. The market cap of the stock is 10,247 crores. The stock I'm talking about is Azad Engineering. The current price of the stock is 1,659 rupees. Azad Engineering's expertise lies in producing blades, vanes, and other critical components which are used in power plants. Azad Engineering supplies precision parts for equipments used in oil exploration, drilling, and processing. The company also provides components for heavy industrial machinery, ensuring durability and high performance. The company serves major global players, including General Electric, Siemens, Mitsubishi, and Rolls-Royce. The company leverages advanced technologies like 3D printing, CNC machining, and digital twins to enhance the manufacturing efficiency and reduce the lead times, which is particularly valuable in fulfilling high precision contracts in aerospace and defense sectors. So, Azad Engineering is actively exploring opportunities in new markets, both domestically and internationally, to diversify its revenue streams and to reduce the dependence on a single market. They have strong presence in critical sectors and its focus on innovation positions it well for sustained growth. The fundamentals look good for the stock and a good stock to keep in your watch list. Price to earnings ratio is 146.65, higher than sector P ratio of 76.55. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 10.23%. The fifth stock is a leading financial infrastructure and technology services provider in India, primarily serving the mutual fund and financial services industries. This stock acts as a registrar and transfer agent for mutual funds. It plays a pivotal role in the Indian mutual fund industry by providing services such as transaction processing, record keeping, and customer support for mutual funds. It processes investor transactions like purchases, redemptions, and switches, maintains the investor records, and sends account statements. The market cap of the stock is 25,230 crores. The stock I'm talking about is CAMS. The current price of the stock is 4,951 rupees. So, CAMS is a monopoly handling over 70% of the mutual fund industry's asset under management. The company offers advanced technology platforms to mutual funds and financial institutions for efficient operations. It provides mobile apps and web-based platforms for investors to access their mutual fund portfolios. So, CAMS is a registered KYC registration agency and facilitates Know Your Customer, that is KYC, compliance for investors. It also provides back office support for insurance companies, including policy processing and customer service. It also manages corporate actions like dividends and bonuses for mutual funds. The mutual fund industry in India is expanding rapidly. The industry's asset under management has grown consistently, and CAMS, with a dominant market share, is directly benefiting from the growth. The fundamentals look good for the stock and a good stock to keep in your watch list. And this has given a 60% buy rating for the stock. Price to earnings ratio 63.13, lower than a sector P ratio of 90.18. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 40.4%. The sixth stock is a leading Indian company specializing in water and environment management solutions. This stock provides a wide range of products and services related to water treatment, wastewater treatment, and environmental management. The company offers water treatment solutions for industrial, municipal and residential purposes using technologies like reverse osmosis, ultrafiltration, and demineralization. The market cap of the stock is 10,431 crores. The stock I'm talking about is Ion Exchange. The current price of the stock is 662 rupees. It also provides wastewater treatment solutions for industrial and municipal sectors, including advanced technologies such as zero liquid discharge, effluent treatment plants, and sewage treatment plants. Ion Exchange manufactures specialty chemicals such as resins, coagulants, and anti-scalants to enhance the performance of water treatment systems. The company also offers environment solutions including air pollution control and solid waste management systems, as well as recycling technologies. They serve various industries including power generation, chemicals and petrochemicals, pharmaceuticals, food and beverage, municipal corporations, and real estate. Rising water scarcity and pollution levels are driving the demand for advanced water treatment technologies globally. Policies like Jal Jeevan Mission in India are expected to drive the demand for water treatment infrastructure. The governments and industries are increasingly adopting stricter environment regulations which benefit companies like Ion Exchange. The fundamentals look good for the stock and a good stock to keep in your watch list. Price to earnings ratio is 48.25, higher than sector P ratio of 34.71. Equity ratio is lower than 1. Return on equity for the last financial year was 19.72%. The seventh stock is a global technology company that provides mobile advertising and marketing solutions. It focuses on delivering targeted advertising to mobile users through its proprietary platforms, which includes a variety of tools for performance-based marketing. The market cap of the stock is 24,843 crores. The stock I'm talking about is Apple India. The current price of the stock is 1,726 rupees. Affle's solutions help businesses reach their target audience through app-based advertising, digital campaigns, and data analytics. The company uses artificial intelligence and machine learning to optimize ad targeting and improve the user engagement. Affle India operates in sectors such as mobile app marketing, ad tech, and analytics, offering solutions to business in areas like e-commerce, gaming, and fintech. It has consistently shown strong growth due to its innovative business model and strategic position in a rapidly expanding market. India's digital ad spend is projected to grow at a CAGR of over 20% in the coming years. The digital advertising market in India and globally is expected to grow exponentially. Affle has a history of acquiring companies that complements its business model, so recent acquisitions have strengthened its presence in the gaming, e-commerce, and app development ecosystems. Affle is one of the few listed companies in India providing mobile advertising solutions, giving it a niche market advantage. The fundamentals look good for the stock and a good stock to keep in your watch list. Analyst has given a 60% buy rating for the stock. Price to earnings ratio 72.46, higher than sector P ratio of 35.01. Debt equity ratio is lower than 1. Return on equity for the last financial year was 12.7%. The eighth stock is an Indian hospitality company that owns, develops, and operates hotels. This stock is one of India's largest and fastest growing hotel chains in the mid-market and economy segments. The market cap of the stock is 12,165 crores. The stock I'm talking about is Lemon Tree Hotels. The current price of the stock is 153 rupees. They operate multiple brands including Lemon Tree Premier, Lemon Tree Hotels, Red Fox Hotels, and Aurika Hotels and Resorts. The company has a strong presence in major Indian cities and tourist destinations with some international expansion. Revenue is generated through room bookings, food and beverage services, even hosting and management fees from franchise or managed properties. Domestic travel in India is expanding rapidly, so Lemon Tree, being a prominent player in the mid-market segment, is well positioned to capture this growth. Lemon Tree is aggressively expanding its portfolio. The company plans to increase its room inventory significantly in the coming years, targeting key markets across India and select international locations. Lemon Tree is targeting underserved markets in smaller cities where demand for quality, budget-friendly accommodation is growing. So, Lemon Tree has significant growth potential due to its strategic positioning in the mid-market segment, expansion plans, and operational efficiency. The fundamentals look good for the stock and a good stock to keep in your watch list. Analyst has given an 81% buy rating for the stock. Price to earnings ratio 79.97, higher than the sector P ratio 73.06. Debt equity ratio is higher than 1. Return on equity for the last financial year was 14.9%. If you like this video, don't forget to subscribe to this channel, and thank you for watching.